What's up, guys? Excalibur here. Just want to make a quick video on how I personally use the Fibonacci retracement tool. A lot of people have been asking for a kind of a video on how I use it. So I'm going to go ahead and explain on SPY the two different ways I use it. Don't always use it on every stock, but when we have a nice retrace down, I like to see where possible points of reversal are. You know, they're not reasons to get into a stock. You just want to make sure, just to notice that point. And if we do possibly reverse there, that's why we reversed. So I'm going to show you. So from our all-time high, what I like to tell people is our trend is down. We're still going down. So the fib retracement, you could tell, our first time going down is if we take this fib retracement from this high right here to this low, I want to look at this 0.5 or this 0.618 retracement. I want to see if we're able to kind of reverse at that 0.5 or reverse at the 0.618. This was not the best example, but 0.618 we weren't able to, we only held over it for one day, and you can tell how strong we reversed. And then we have this one right here. We have, I like to do it on legs. You have, this is our kind of our waves in the stock. We up, down, up, down, up, down. So you're doing this retracement from these. So I'll just leave that on from here to here. We kind of went over that 0.618, but not, a nice overall reversal. More recently, these are pretty much spot on, but we have those 0.618. You like to use it, and then I also like to use the minus 0.1. This isn't my retracement. Just found someone on Twitter that does this, and it looks pretty cool. I mean, you can tell where we're the three kind of reversals after this drop are kind of at this point, this minus 0.1. And that's that fib right there. We could take this one right here from this swing high to a swing low, and look, we we reversed at that 0.618. We were able to push above that half into that 0.618, but look at that reversal from the 0.618. The half to the 0.618 is probably the sweet point. I'll go over on other, show you on other things. But since this recent drop right here, since March 22nd, we kind of have this pattern. We have a down, an up, down, up, down, up, down, up, down, okay? So if we take this fib retracement right here from here to there, look at that beautiful 0.618 right there. We retraced up to the 0.618 0.5. If we go from this here to this one, where was our reverse twice? The 0.5, 0.5. And then also the one that I called those SPY puts out, I looked at that possible fib retracement from this swing high to this swing low. So it's a recent strong high to a recent strong low. And look where we reversed at 406.11. We were able to, if it wasn't news based, you could tell, look at that how that acts around that fib. And then we had that news based, and then we dropped from there. And then look where we reversed on Friday at 380.76, that minus 0.1 fib. Pretty solid reversal. If you have all your fibs up, I just have certain ones I watch. 0.26. Most of the time these fibs do work very well as a supply and demand. And then also, that's one strategy I've been using. Also, another strategy I've been using is when you see these gap ups, kind of like right here. I'll go to kind of like the 5 or 10 minute, and I'll fib retrace this gap up right here from here to here. And then I like to watch, sorry, from low to high. Yeah, from the low to high. And I like to watch it come back and see what it does on that 0.5. You can tell, look at that, beautiful, came down 0.5, reverse back up. SPY the other day, this is why I got a little quick little scalp on SPY right here. You know, you do this, the gap up, you take this kind of fib from the gap, and we came down at 0.318, but you know, the 0.5 pretty much held. And you know, that's another strategy I like to use. Doesn't always work, but you know, as long as you use those fibs, you know, they're kind of possible reversal points. Also, on probably the third strategy I use are kind of the, you know, if a stock has a big gap up or a gap, you know, a big gap up or a gap down, you put extended hours on, you look for this 4-hour big candle. So we're looking for this 4-hour big candle, and we take the fib of that candle. And then we're looking for our possible reversal points, and it's going to be that 0.5 or the 0.618. And then look at that beautiful bounce off that 0.618. A lot of stocks that have those big earnings candles, you could, you know, the 0.5 or 0.618 is going to be a nice sweet reversal spot into the stock. You know, Snapchat has a lot of these. Right here was that big, you know, one from earnings from swing low to high. And there's that 0.618 right there. Nice little bounce off that 0.618. That's usually when, you know, they say computers or algorithms like to buy in again after that buy-in. Twitter was another one. Someone mentioned they want to short Twitter, but I was like, you know, watch this. You know, I already have it marked up. I'm like, watch this 0.618 at 43.73. We might have a possible reversal there. I think they wanted to short it here all the way back down to here. I was like, we might have a possible reversal. And look what we did. We came down to that 0.618 and reversed pretty strong. We were able to hold that, and then you could tell where did we fall through. You know, that 0.618 is a nice support, and then we fell through. Try to find a couple other examples of this. Square. Pretty sure Square had some solid moves. I don't think this candle's going to work because it wasn't a super strong one. I'd probably do from that low to the top of that candle. You could tell 0.618. Nice little bounce. These are the few strategies I find best for fibs. You know, look at how the Fibonacci's work around these patterns. And you know, that's the best way to use it. Netflix, you know, this is one of the best examples I like to show people on this. You have this huge 4-hour candle. They were able to push the stock all the way back to that 0.5. And then where does it go after that? They just drop it all the way to the 0.5. You know, look at that bounce. You know, fibs do work out. Definitely add it to your multiple strategies you guys want to adapt into your, you know, supply and demand. But especially with these retracements, you know, on SPY, you know, we're gonna retrace. You know, we can't completely sell off. You know, we're gonna have like dead cat bounces, and that's what I'm looking for. My so we've been trying to show you what guys I'm right here. So on this one, we went from here to here, and then we went down almost to the minus 0.5. So that's what I'm looking kind of at this retracement. It's 9.5. So if this trend wants to continue, you know, this would be 4 times in a row. We should probably see 363, and then we should have a bounce up to that 0.5386. So if this trend wants to continue, we're going to see this 363 bounce up to that 0.5 fib and then probably continue down. If that's the trend still going on, the trend's been down since the New Year's. So that's going to complete my Fibonacci kind of little quick tutorial on how I use it. Definitely just a little recap. You got your swing highs and your swing lows are just recent highs and recent low parts, and then you can tell we have that reversal. Usually reverse back up to the 0.5 or 0.618 and then continue down. From here, swing high to a swing low. We had a reversal here. We reverse back up to that 0.5 and then we continue to go down. So definitely mark those up on higher time frames, and hopefully that will help you guys try to find possible reversal points. Fibonacci's don't, just like everything else in the market, Fibonacci's aren't the golden uh, indicator. There is no golden indicator. So that's gonna end it for me, guys. Make sure you guys like and subscribe and follow all my socials. Having a lot of people watch these and not subscribing here. Definitely, all you gotta do is subscribe. It's all it takes. It's the little button. Doesn't affect you guys at all. But y'all have a great rest of your Sunday.